Stanley has come out with some very optimistic predictions for the India of the next decade. In a report that is named India's Impending Economic Boom, the American multinational has predicted that India may overtake both Japan and Germany in the next 4 years, and this to become the third largest economy in the world. Morgan Stanley is expecting India's GDP to more than double in under 10 years to $7.5 trillion by the year 2031. Our current gross domestic product, the GDP, amounts to around $3.5 trillion. Now, the financial services multinational is saying that India may become the third largest stock market by the year 2030, with the Bombay Stock Exchange delivering 11% annual growth over the coming period. So with the Indian economy compounding at a solid rate, India is soon going to become one of only 3 economies in the world with over $400 billion in annual economic output growth. Morgan Stanley says that India is poised to become the factory to the world. Corporate tax cuts, investment incentives, and infrastructure spending, all of these are going to help drive capital investments in manufacturing in India. They support their predictions with data as well. They predict that in the next 10 years, India's manufacturing share as a percentage of GDP is going to rise to 21% by the year 2032. As of today, it is around 15%. And by the end of the decade, India's overall consumption may also more than double. How exactly? Well, Morgan Stanley believes that India's income distribution could flip by the end of the decade. As of 2021, just 1/4 of households in India, in terms of income distribution, earned over $10,000 a year. By 2031, Morgan Stanley is predicting that this number is going to become almost half of the households in India. So this report sees a number of households in the top income bracket surging to 7% by the year 2031. In fact, Morgan Stanley predicts the number of households in the lowest income bracket to go down. In 2021, according to the report, 38% of households have been earning less than $5,000 a year. That number is expected to go down just 13%. But then what will drive the growth in India? Well, it seems energy is going to be driving growth. Investments in power will power growth. India's daily energy consumption could rise by as much as 60% over the next decade. The new investments and moves away from fossil fuels will reduce India's reliance on imported energy. And as India moves towards energy independence, Morgan Stanley is expecting an over $700 billion to be poured into energy investments. And apart from this, a mid-30s median age of population is going to usher in a greater demographic dividend in the next decade. But the path is not as easy as it appears in this report. The dangers are present and they are clear. Global recession and a tense geopolitical situation, these are the greatest roadblocks right now. Domestically, bad decision-making and policies and political gridlock threaten growth. In fact, an overzealous central bank and financial system that continue to tighten monetary and fiscal policy could also hamper growth going ahead. So the path to India's economic glory seems clear. The goals are set, but the dangers remain.